Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is May 28th, 2025, and we're diving into Columbus McKinnon's latest earnings report for the full year and fourth quarter of fiscal 2025. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Columbus McKinnon, a leader in intelligent motion solutions for material handling, has just released their fiscal 2025 results, and there's a lot to unpack, from record orders to strategic initiatives.
Revenue and profitability overview. Let's start with the top line. Columbus McKinnon reported net sales of $963 million for fiscal year 2025, a 5% decrease from the previous year. John, what are the key factors behind this decline?
The decline in net sales is primarily due to short-cycle order softness and a longer delivery timeframe for higher project-related orders. Despite this, the company achieved record orders of $1 billion, indicating strong demand in project-related business and precision conveyance.
And what about profitability?
Columbus McKinnon reported a net loss of $5.1 million for the year, largely impacted by non-cash pension settlement costs and other one-time expenses. However, their adjusted EBITDA was $150.5 million, reflecting a solid adjusted EBITDA margin of 15.6%. The adjusted EPS for Q4 was 60 cents, beating the forecast of 57 cents from two analysts.
Operational efficiencies and future outlook. Columbus McKinnon seems to be focusing on operational efficiencies. Can you tell us more about their strategic initiatives and future outlook?
Absolutely. The company has increased its backlog by 15% to $322.5 million, which positions them well for fiscal 2026. They've also repaid $60.7 million of debt, which is part of their capital allocation priorities. Looking ahead, they expect net sales to be flat to slightly up in fiscal 2026, not accounting for the pending Kito Crosby acquisition, which is expected to enhance their intelligent motion strategy.
How is the acquisition progressing?
The acquisition is on track, with regulatory clearance being the next step. Columbus McKinnon anticipates closing the transaction later this year, which should bolster their product offerings and geographic reach.
CEO's perspective and strategic initiatives. What insights did the CEO, David Wilson, provide regarding the company's strategy and market conditions?
David Wilson emphasized the strong backlog and continued order growth as key strengths. He highlighted the company's strategic focus on capitalizing on industry megatrends like onshoring and global infrastructure investments. Additionally, they're actively working on supply chain adjustments to mitigate tariff impacts, which should help stabilize costs in fiscal 2026.
It sounds like Columbus McKinnon is well-positioned to navigate future challenges.
Indeed, their proactive approach to managing volatility and strategic initiatives should support their growth and profitability in the coming years.
Key takeaways. In summary, Columbus McKinnon has demonstrated resilience with record orders and strategic initiatives aimed at future growth. Their adjusted EPS for Q4 exceeded expectations, and they continue to focus on debt reduction and operational efficiencies. John, any final thoughts on their investment prospects?
Columbus McKinnon is a solid company with a clear strategic direction. Their focus on industry trends and operational improvements makes them a compelling investment, especially with the upcoming Kito Crosby acquisition.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Columbus McKinnon's performance in the comments below.